Today we are talking about the new mortgage rules that come into effect this December and how they are set to make waves in the next few months for both buyers and sellers in 6 simple, easy steps. Step number 1, bigger budgets for first-time home buyers. So let's start with one of the biggest changes. You may already have heard about it, but we'll talk about the impacts of it further down in this video. So as of December 15, 2024, the government is raising the insured mortgage cap from $1 million to $1.5 million. So what does this mean for you? Basically, if you're buying a home price between $1 million to $1.5 million, you no longer need that huge 20% down payment. Before this change, if you wanted a home over $1 million, you would have to put down at least $200,000 to avoid paying the mortgage insurance. But now with these new rules, you only need to put down as little as 10% for homes priced up to $1.5 million. That's a game changer for many buyers in the city of Toronto, especially first-time home buyers. Well, this is huge in a city like Toronto where many homes, even the most modest ones, easily top $1 million. So with this new rule, more people will be able to afford homes in that 1.5 million price bracket. Step number 2 is 30 years amortization, which leads to lower monthly payments. So next up, we are going to talk about first-time home buyers and people who are buying newly constructed homes. Those people are going to qualify for 30-year amortizations. Yes, you heard that right. Starting this December, you will be able to spread out your mortgage payments over 30 years instead of the usual 25 years. And this is huge for making those monthly payments more manageable. So let's say you take out a $900,000 mortgage at a 4.2% interest rate. If you opt for 25-year amortization, your monthly payments would be around $4,800. But with a 30-year amortization, that drops to about $4,200. That's a $600 difference per month. Over time, that could mean the difference between buying let's say, a small condo or a detached home. Keep in mind though that while your monthly payments will be lower, you will end up paying more interest over the life of the loan. It's all about what works better for you and your budgeting and also long-term financial goals. Step number 3, expect a surge in activities in early 2025. This is very important in my opinion because that tells us that the market is picking up and eventually is going to consolidate a bottom for the real estate market in Toronto. So what does that mean for the Toronto real estate market come early 2025? Well, we are expecting a surge in activities with these new rules making it easier to qualify for a mortgage and buy a higher priced home. More buyers are going to flood the market. And don't forget, interest rates are expected to continue dropping through 2025 as well. This is based on the information that we have right now. It might change in the future, but based on what I see right now, this is the most probable scenario. So this means that if you're planning to buy, the window to act is now. As more buyers re-enter the market, we could see competition heating up, especially for homes priced between $1 million and $1.5 million, where a lot of first-time home buyers are going to be shopping. So the inventory is still high right now, but as demand picks up, that might not last long. So step number 4, price stabilization and inflation concerns. Now let's talk about the pricing. The market has seen a lot of fluctuations recently, but these new mortgage rules might bring some stability, at least in the short term. As more buyers flood the market, we're likely going to see price increases gradually, of course, especially in the high demand neighborhoods like Leaside, for example, or Annex. That being said, if too many buyers chase the same limited supply of homes, we could see some price inflations as well. This is something to watch closely. So if you are thinking about selling, early 2025 might be a time to list while the demand is picking up and prices could climb. So step number 5 is long-term considerations, balancing short-term and long-term costs. While these changes are good news for buyers right now, there are some long-term considerations to keep in mind. The 30-year amortization makes your monthly payments smaller, but over the life of the loan, you're going to pay a lot more in interests. And remember, just because you can qualify for a larger mortgage doesn't mean you should overextend yourself. That's what I always tell my clients or the viewers on this YouTube channel. I don't know if you're watching it through YouTube or other channels. You may always hear that I'm saying that you should not overextend yourself. In fact, a while ago, I put up a video that you shouldn't buy a property in Toronto if your margins are tight. You can go and watch my other video. So all in all, it's all about the balance. So work with your financial advisor or mortgage broker to figure out what makes sense for you in the long run. Stretching your payments over 30 years could free up monthly cash flow for now, but be mindful of how that impacts your total interest paid. So step number 6 and the final one, what does this mean for sellers? So now let's not forget about the sellers. If you are thinking of selling early 2025, these changes could be a blessing for you. More buyers with larger budgets mean more competition for your home, especially in that $1 million to $1.5 million price bracket. So if you price your home right and list it while the demand is high, you could benefit from multiple offers, possibly, and higher sale prices, again, possibly. It depends on so many factors, your location, the condition of the house, lots of other basically factors that could affect the price that you want to get for your homes. But be aware, pricing too high in a competitive market might mean your home sits longer or way longer than the average than you would like. So it's all about finding the right strategy. So there you have it. And if you have any questions or you want to book a meeting with me, please use the link down below. I would love to help. Thank you for watching, and I'll see you in the next one.